Good morning, everyone, and welcome to this Sunstone Metals presentation. I'm Paul Armstrong from Reed Corporate. Sunstone has this morning published the maiden resource for its El Palmar gold-copper project in northern Ecuador. It's a substantial resource, but importantly, there's also a very large exploration target that comes with it, and that target shows the scope for the project to become a Tier 1 scale operation. Sunstone also has a large resource at the Bramaderos project in southern Ecuador. Bramaderos, of course, includes the very promising Limon gold-silver discovery, and Sunstone is planning to put a main resource on Limon too. The way we'll work this morning is that Managing Director Patrick Duffy will begin the presentation shortly, give us some insights, and then he will pass to Chairman Malcolm Norris, who will take us through some of the geology and the more technical aspects of the projects and the company's outlook. They're both happy to take questions, so if you'd like to ask a question, please click on the Q&A tab on the corner of your screen and send that through, and we'll endeavour to put as many of those questions as we can at the end to Patrick and to Malcolm. Over to you, Patrick.
Okay, thank you, Paul, and good morning. Welcome everyone to Sunstone's webinar today. Sunstone is very pleased to be announcing the maiden mineral resource and complementary exploration target at El Palmar, which together demonstrates the extraordinary Tier 1 potential of El Palmar. Sunstone is fortunate to have two very large projects in Ecuador, being El Palmar and Bramaderos. Bramaderos already has a 2.7 million ounce mineral resource as part of a very large overall porphyry target, and more recently has been advancing the high-grade Limon epithermal system at Bramaderos. However, today, Malcolm and I will be putting the spotlight on El Palmar, which has the potential to be an absolute monster deposit and become a globally significant gold and copper mine in Ecuador. A deposit of this scale has very real appeal to the major mining houses who are seeking these multi-decade gold copper porphyry deposits to sustain and grow their companies, and it's very timely to be releasing this information. Before I go further, I expect many on the call will either know Malcolm well, given his long tenure as CEO of Sunstone, or myself from my previous public role at mid-tier gold producer Red 5. Malcolm and our chief geologist, Bruce Rawlack, are two of the leading porphyry geologists in the world, having made a number of enviable large porphyry discoveries during their careers together. Malcolm and Bruce were at SolGold when the discovery of Cascabel copper and gold porphyry system was made, when Malcolm was the CEO of SolGold. They were also together at Intrepid when they made the Tujuh Bukit discovery in Indonesia. And they both worked for Western Mining as part of the team in the Philippines that discovered the Tampakan copper and gold porphyry system, which is one of the largest in the world. I've been very fortunate to join Sunstone early this year to work together with Malcolm, Bruce and the team. My last role was as head of corporate development at Red 5, on the back of the success of building the King of the Hills gold mine in WA. We took Red 5 from a $60 million market cap in 2019 to $2.5 million when I left at the beginning of this year. And prior to Red 5, I spent 10 years working in Asia and the Pacific for Glencore and Xstrata, including building the $7 billion Koniambo nickel project in New Caledonia. Since coming on board, I've been seeking to define a sustainable strategy to position Sunstone for a sustained period of growth and realise the full value potential for our two world-class projects. Having recently raised $6.5 million, we are now very clearly focused on delivering today's resource at El Palmar, advancing exploration at the Limon deposit at Bramaderos, albeit we have paused drilling at this time to preserve our cash, and advance partnership discussions with any potential transactions designed to accelerate exploration and resource growth at our projects. This year we have been refreshing our board and adding to what is an exceptional track record for the board and management team. Malcolm was recently appointed chairman, taking over from Graham Ascoff, who retired back in September. We've also added Neil O'Connor, who was for 10 years Chief Legal Counsel of Xstrata Copper and has a huge amount of experience in South America with mining and development operations and a skill set that's complementary to the board. We've also welcomed Lucas Welsh, an experienced mid-cap CFO who's joined the company like the rest of us and sees great potential for Sunstone going forward. I'd just like now to introduce El Palmar, which is in northern Ecuador, and it's adjacent concession Verde Chico before passing over to Malcolm. It's a 3-hour drive from Quito, the capital. It's located about 1,500 meters above sea level. It's mostly agriculture. There's no protected areas or native forests. We have a very supportive community who understands mining, given that there's mining in the area. And we're fully permitted to drill, and we have access to water and power. I'll now hand over to Malcolm.
Thanks very much, Patrick. And it's a pleasure to be here. And obviously, there's been a huge amount of work go into delivery of this inaugural mineral resource and exploration target. So credit to the team, and credit particularly to Bruce Rawlack with leading the technical side of this project. So just to put you into the picture, the El Palmar and Verde Chico projects are located on the Toachi Fault Zone, which, for those of you that are familiar with porphyry deposits, this is an arc parallel regional structure. And then where you see cross-cutting orthogonal structures or arc normal structures, you quite often see that localizing porphyry and epithermal style mineralization. And we see that at Cascabel, which you can see in the upper left of that image there, 3 billion tonne deposit. The structural controls on that are very much both the Toachi Fault and these arc normal structures. Urimagua, slightly similar, copper moly deposit, billion tonnes. And then El Palmar, which at this stage is a gold copper porphyry, but we anticipate the copper component of that increasing with more drilling. This is a belt of rocks that is seeing a lot of mineral exploration. So you can see there from that diagram that SolGold have a very significant land position, and then surrounding them is Hancock. And then Hancock also have a joint venture with the Ecuadorian government mining entity called Anami, which surrounds the Urimagua deposit. And they've agreed to spend $120 million US to earn a 49% position. So this is an active belt, and it's a desirable belt. This is where you're going to find giants. And we have every reason with today's news to think that El Palmar is going to join that club. So let's go to the next slide. Okay, so let's spend a bit of time on this diagram. It captures everything that we're reporting today. So you can see in the upper parts of this, there's T1 and there's a modelled open pit outline. So the mineral resource today, 64 million tonnes at 0.6 gold equivalent. So that's gold and copper and a small component of silver, with a cut-off grade of 0.4 grams per tonne gold equivalent. That's pit constrained. So it's the material in our block model that falls within that pit. Everything outside of that is captured in the exploration target. So the exploration target we'll get to in a minute. It has a number of different components, and you can see the different colours on this image defining those different components of the exploration target. The grey zone in the background is that Toachi Fault Zone. So again, just tying it back to the geology, that's a critical component. And this mineralisation is related to the structural controls, with the main feature being the Toachi Fault. The different components of the exploration target have different levels of data, different levels of drilling. I would argue that we've taken a somewhat conservative view of this, and the components of this are components that we're very confident with more drilling will move into resource. So the exploration target itself, 1 billion to 1.2 billion tonnes, puts it in the same scale as the Cascabel Alpala deposit and Urimagua. So we're up there with neighbouring deposits. The range of grade, 0.3 to 0.7 grams per tonne gold, 0.1 to 0.3% copper. And so that gives us 10 to 27 million ounces of gold contained and 1 to 3.7 million tonnes of copper. And that's estimated from 3 of the targets that are within this El Palmar concession. And there are other targets that have yet to see any drilling or could be included in the exploration target. So lots of upside still to come. And with more drilling, more and more of that exploration target will move into resource. Let's go to the next slide. Okay, so this gives you a view of the mineral resource and the components of the nearby domains that are included in the exploration target. So you can see there the block model with the multiple colours all captured within the pit. And then on the right-hand side, the blue and purple and red domains are those that haven't seen enough drilling to be included in the mineral resource, but you can see some components of them are already within that pit. So with more drilling, they'll move straight into the mineral resource. And then as we define results for the purple and red areas, they will influence a pit shape, or they will influence how we could contemplate developing this deposit as we get deeper. You can see there 460 metres from surface down to the bottom of the constraining pit, entirely consistent with big porphyry deposits. And then the exploration target continues deeper than that again, and that's shown in the next few slides. Let's go to the next one. Okay, so these are some of the other components. So on the left, you can see again the grey pit, and then the different colours are contributions to the exploration target. And the important component of this that we haven't seen on the previous slides is that T2 porphyry. So this is where we're starting to see these clustering of porphyries coming together and contributing to the exploration target. And then on the right-hand side, you can see the T2 porphyry close to surface in green and yellow. And then at depth, that is connecting to the T2 deep porphyry and the T3 porphyry. And then subdued in the background is those other magnetic anomalies that haven't been drill tested. We've done very little work, essentially no work on those, and they haven't been included in the exploration target. So that's where we say with more drilling, we offer potentially upside to this large exploration target figure. Let's go to the next slide. Okay, so let's just step back and talk generally about the upside potential. So you can see there the Toachi fault zone, you can see the El Palmar concession, the components of this exploration target, T1, T2, T3 are shown there. And then there's a number of other targets that haven't been included in it. And then further west, the Verde Chico concession. This significantly enlarges our land holding in this area. It has a highly prospective at-surface epithermal gold deposit that was discovered by Rio Tinto 30 years ago. You can see some of the grades written there. So, you know, there's a significant story evolving at El Palmar, and the mineral resource is the first step. We wanted to demonstrate to people that there's a resource at surface. We would envisage as a development opportunity as an open pit, and then sitting within that pit, slightly below it and deeper, the exploration target components that will bring this deposit into the plus 1 billion tonne type scale. So a huge opportunity, and one that we can continue to grow. I'll hand back to you, Patrick.
Thanks, Malcolm. And we'll take questions at the end on El Palmar. Just briefly, we'll cover Bramaderos. Obviously, it's a very important asset. It's a similar major porphyry discovery that's been made by Sunstone. It's got some different dynamics. There's a lovely photo here. You can see the valley. It's 1,000 metres above sea level. And in that valley, you have these hills that are representative of the porphyry systems. We have a resource of 2.7 million ounces at Brama Elba, and an exploration target, including Brama Elba resource, and taking into account melanol of over 10 million ounces. This is a perfect location. It's southern Ecuador, very remote, very supportive communities that have sort of subsistence agriculture and want to see mining developed here. It's on the Pan-American Highway. It has access to excellent infrastructure. And it's probably the easiest mining you could imagine, just mining these hills into large open pits with lots of potential upside. The concession map on the left, it just shows the black circles where we were looking at those hills, which are Bramaderos and Malinal, plus a number of other porphyry targets. We have the resource graph on the right and the potential to take that significantly higher with further drilling. And in the last 18 months, the company has been focused on advancing Limon, which is an epithermal system in the top right corner, which has an exploration target of 1 to 1.7 million ounces. And the significant advantage of Limon is it's a much higher grade at surface complementary deposit to the porphyries, which we're looking to get into a resource next year with further drilling to be undertaken first. The results have been reported over the last 18 months, some outstanding results, 190 metres at 3 grams. Hole 26 is an incredible result. Big wide systems, epithermal shoots that are coming up. There's still a lot of exploration to be undertaken here, but perfect open pit opportunity. And the flexibility in the future, if it's Sunstone developing Bramaderos to develop Limon as a standalone starter mine and get it in production, producing circa 100 to 150,000 ounces per annum to help fund then a bigger porphyry development at Bramaderos. Or if we're partnering with a major, potentially this becomes part of the overall development and high grade complementary feed to the porphyry developments at Bramaderos. Just stepping back, Ecuador, which we love as an incredible mining opportunity. It's on part of the Andean copper belt, same sort of porphyry systems that you see in Chile and in Peru, south of Ecuador. Huge potential, 2 world-class mines, Fruta del Norte, owned by Lundin Gold, and Mirador, which is a huge copper mine owned by Tongling, a Chinese company. All the majors are present. There currently is a very pro-mining, pro-business president who's done a lot of excellent things. There's an election next year, which we expect he'll be re-elected, and in advance of that, there's been a lot of corporate activity with companies getting holdings in country to be able to position themselves for development in the next 4 to 5 years. And putting my mining hat on, Ecuador is extremely attractive. Energy costs are half the cost of what they are in Australia as a result of being a major oil producer, and 80-90% of the power grid being supplied by renewable energy from hydroelectricity. And not surprisingly, labour costs are a quarter of what you would pay in Australia or Canada. If I was to step back and take King of the Hills that we built with Red 5 in Western Australia with an all-in sustaining cost of over $2,200 per ounce, if we were to put that into Ecuador, that would be, and apply these cost inputs, the all-in sustaining cost would be less than $1,000 Australian. So a huge advantage in addition to the large porphyry developments that we have at Sunstone. Obviously, it's great to be putting this news out with momentum in gold, record prices this week, and continues to go from strength to strength. In the background, there's a lot of geopolitical uncertainty and volatility, and we've seen with US dollar rate cuts in the last 2 months, gold has gone on a significant tear. Also, that there is consensus now, I think, around the fundamentals of copper, of which we have a significant portion of copper in both projects. Very difficult for ongoing supply to replace existing copper mines, and very difficult for copper supply to keep up with future demand for copper. And we're seeing a lot of positioning again by the majors and by countries like China trying to get hold of major copper resources. And again, Sunstone's well positioned to take advantage of that. Finally, we are well funded now. We raised $6.5 million in September and October through a placement and an SPP and received great support from our shareholders. We're funded well into next year. We're focused now on these 3 deliverables. One today, obviously, is delivering that El Palmar resource and exploration target, looking to continue exploration at Bramaderos, and thirdly, looking to advance the discussions with strategic partners to be able to unlock these huge, large assets. And we really are well poised for a re-rate. Unfortunately, at the moment, our valuation on a enterprise value per resource is less than $10 per ounce. When you compare that to our peers, look at the momentum in the current market, should be at least $40 to $60 per ounce. So huge upside. And with the continued focus on these catalysts, I expect our share price will perform very strongly. I'll now hand it back to Paul and we'll go through the questions.
Thanks very much, Patrick. Yes, there are a few questions, so we'll just work our way through them. I think some of them perhaps you may want to take, or some you may want to defer to Malcolm on. And we'll leave that with you guys to sort that out. I'll simply put the questions. Paul Howard asks us, congratulations on the excellent progress. He says, has your resource consultant given you an estimate on how many metres it would take to convert more of the exploration target into the resource to potentially deliver, say, 4, 6 or 8, 10 million ounces?
Yeah, Malcolm, did you want to comment?
Yeah, okay. Yeah, Paul, thanks for the question. Look, we're going through that process now. So there's a few components to that. One is we've got a drill program that's been planned for some time of about 8,000 to 10,000 metres, which would convert a lot of that exploration target that's within the pit into a resource. So that's the first step, right? And that's very low risk. Then with this recent work, we can step out and do some drilling on some of the T2 related targets. That would be the next step. And then the third component is obviously deep drilling. That's to do with the deeper components of the exploration target. And as a junior, we can't say that that's a priority. But under joint venture or strategic investment type scenarios, then that may well become a priority. Because when you go down that path, you're obviously keen to define as large a deposit as quickly as you can. So to answer your question, there's an obvious 10,000 metres to drill to bring a whole lot more of that material into resource. That's planned, ready to go. And then there's these other strategic discussions that are ongoing regarding defining the remainder of the exploration target into resource. I should say there's 3 key holes that drive the scale of this exploration target. One is hole 24, which was drilled into T2, and that gave us a lot of confidence that we had a porphyry system below it because it intersected rocks that had porphyry mineralisation as clasts within a breccia. Then there was holes 26 and 28, which actually drilled the deep T3 porphyry. And these were drilled at a depth that started at 800 or 900 metres below surface. So these intersected ore-grade mineralisation over widths of 190 metres and 250 metres. So while the exploration target is very large, it is supported by drilling. And we do know that these domains that are defined by geophysics are mineralised. So that's why this is such a high conviction target and a high conviction exploration target.
Our next question, Malcolm, is an extension of that. A viewer asks, is the priority to upgrade more of this initial resource to indicated or to convert more of the exploration target to the JORC? So I suppose following on from your answer there, Malcolm, is do you plan to convert some of the resource to indicated?
Yeah, so the next logical step is to do both, actually. So yeah, we'll bring some of this in-pit material into resource that's currently in the exploration target. And in the process, we'll be drilling at a spacing that will probably allow us to move some of it into indicated. So those two things work in parallel within this pit and a slightly modified pit as the work progresses. So a good example of that is, can we push the pit towards T2 to the east and capture more material? Can we push it a bit further towards the T5 target to the south and capture more material? So combination, grow the inferred and convert some of the inferred to indicated with that program. Okay,
a question regarding the discussions, Patrick, the corporate discussions and the like. As a viewer says, the success of El Palmar obviously hangs on getting a partner. Perhaps you've got a view on that statement. It's not a question so much. but can you provide some commentary on the progress and timeframes of those discussions?
Yeah. So obviously there are constraints on what I can say in terms of active discussions, but certainly today's announcement is helping to position El Palmar as this tier one potential opportunity and give comfort to groups that may be looking at Sunstone and maybe in the data room, or others that looking to evaluate that there's a huge opportunity here underpinned by an initial resource. It's very difficult to predict timeframes. I could give you an example. My previous role, we sold a mine in the Philippines and it took 2 years, but that was a very small, difficult mine in a difficult location. This is completely different scale and different opportunity, and in a market where everyone's clamoring to get these huge gold copper systems with byproduct credits, that economics are very favourable. So I'm confident that we will be able to deliver a partnership in the future. But we're certainly not just focused on El Palmar. Both projects have been looked at, and they appeal to different groups. So Bramaderos is in a perfect location. That's at surface, large porphyry deposits, easy to mine in a sort of well-known mining area. And El Palmar offers a huge tier one opportunity, multi-decade system, byproduct credits, again, appeals to different companies. So, and we're not going to give away either project for nothing, and we're looking for the best joint venture arrangements that we can secure, and we won't sign up if we don't think it's in the best interest of the company.
I think you've probably answered this to a degree, Patrick, but you may wish to elaborate. The question is, do you envisage that a strategic partnership would cover both projects, or would they be separate agreements?
Yeah, look, I think we're running a number of different work streams. So probably our ideal arrangement is a joint venture type farming arrangement on each asset, and again, may keep one and joint JV the other, or both, depending on what's on the table. But also open to corporate level sort of strategic investment, and again, just running in parallel. And again, if we don't get the right result, we'll continue to invest in these projects on a standalone basis until the timing is right.
Malcolm, perhaps one for you. Limon is obviously a substantial discovery. How do you see it unfolding from here, and what sort of timeframes do you have in mind?
Yeah, and Limon is a significant component to the story here, and as we've said all along, it offers the opportunity for a stage development where we've got a higher grade front end to a much larger multi-decade development at Bramaderos. At Limon, we need to drill holes, and fortunately, we're limiting those holes to that material that would be captured within an open pit, so they're relatively shallow holes. And we can do that work. We've got planned drilling that's pretty well ready to go around that central chute. And once that drilling resumes and that central chute starts to grow, then we can think about a resource in 2025. The important thing about drilling epithermals is that you have to do a certain amount of work to really understand their structural orientations. So not too dissimilar to some of the deposits in Western Australia in some respects, but once you crack that code and you can start to chase those higher grade zones and the broad lower grade zones, both of which we see at Limon, then you can add a lot of ounces relatively quickly. So I think we're sort of at that stage. Again, Bruce Rawlack and the team have done a great job in defining that geology, and so our drilling is a lot more targeted now. The central chute is at that stage, and then we've got at least half a dozen other areas within the broader Limon area that are still mineralised and need more drilling as well. So we're hoping that we can advance it significantly in 2025.
Another question, Patrick, perhaps for you. Do you intend to resume drilling at El Palmar in the short term, or will you wait for the outcome of the partnership discussions?
No, we're not intending to drill in the short term. We are focused on these discussions and to see where they run. Like, as I said, we're well funded into next year, and gives us time to be able to extract the best possible outcomes. Again, it may or may not happen, so we never know, and we may return to drilling. Again, there's huge opportunity to develop this. I draw on the comparisons of some of the ASX companies like De Grey, which is a 10 million ounce resource, and have been able to navigate that on their own and up until this point, and now a $3 billion pre-development company. And then you can draw parallels with El Palmar, with Cadia, now owned by Newmont, for example, which was an open pit that went into big block caves. But these are world-class assets, and confident we'll get a great outcome for the company.
One more question. What's the next steps at Bramaderos?
Yes, again, we're focused on these corporate level discussions. So that's the immediate focus. We are doing some on the ground surface activities at the moment to keep things moving along there, but we're trying to minimise our spend rates so that we're well funded to get potential JVs in place, and it may be that we don't need to go back to the market if we can get a great outcome for the company.
That concludes all the questions, guys. That probably brings us to the end of the presentation. Thanks everyone for joining us. We've had a great turnout today, and thanks Patrick and Malcolm for your time. If anyone has any further questions, I'm sure they can send them through to Sunstone, and Patrick will get back to you. In the meantime, thanks for joining us, and we'll be in touch about our next webinar.
Thanks, Paul.